In June of 2020, auditors working for a German accounting firm contacted two banks in the Philippines with a routine request. They were trying to confirm the existence of nearly 2 billion euros supposedly sitting in escrow accounts. These accounts were connected to a fast-growing payments company called Wirecard. The request itself wasn't unusual. Large corporations move money through custodial accounts all the time. Bank officials reviewed the documents, checked their internal systems, and came back with an answer. That answer was the same. The accounts did not exist. At first, that sounded impossible. Wirecard wasn't a fringe startup. It was one of the most celebrated companies in Germany's modern financial history. Politicians supported it publicly, and major investment funds held Wirecard. Analysts had spent years describing it as Europe's answer to Silicon Valley fintech giants. Just 2 years earlier, Wirecard had replaced Deutsche Bank in Germany's DAX index. This was a symbolic shift that many interpreted as proof that Germany's economic future was moving beyond traditional banking and industry. And then, almost without warning, the illusion began to crack. Within days, Wirecard admitted that 1.9 billion euros on its balance sheet were likely non-existent. Its valuation collapsed. Executives were arrested and investigations began across multiple countries. But one of the most important figures behind the company had already vanished before anyone could question him. His name was Jan Marsalek. Even at this early stage, the story was already beginning to feel less like corporate fraud and more like something else entirely. To understand how Wirecard reached that level of influence, you have to understand the environment it grew inside. In the early 2010s, Europe, and especially Germany, was dealing with a quiet but persistent anxiety. The country was still economically powerful, but the direction of global innovation had shifted elsewhere. The United States dominated digital platforms and fintech ecosystems. China was rapidly reshaping mobile payments at scale. Europe, by contrast, was increasingly seen as an observer rather than a leader in the digital economy. Wirecard entered that moment with a story that felt almost tailor-made for the time. It offered something that investors, politicians, and institutions all wanted to believe: that Germany could still produce a world-class technology champion. That belief quickly became more valuable than the underlying business itself. Originally, Wirecard operated in a relatively unglamorous segment of finance. It processed payments for high-risk industries that traditional banks often avoided: online gambling, adult platforms, and cross-border merchants operating in regulatory gray zones. Profitable but not transformative, that began to change as Jan Marsalek rose within the company. Unlike traditional executives in European finance, Marsalek did not present himself as a typical institutional figure. Instead, he cultivated ambiguity. People who interacted with him often left with the same impression. He seemed connected to networks that were not visible on any official organizational chart. He spoke casually about geopolitics, intelligence operations, private security structures, and regions of conflict. Conversations about payments could drift into Libya, Russia, or classified intelligence matters. Whether these claims were real or carefully constructed mattered less than the effect they produced. Marsalek created the sense that Wirecard was closer to power than it appeared. And in financial markets, perceived proximity to power can be more persuasive than actual performance. The mechanics of Wirecard's fraud were not technically complex. What made it effective was distance, opacity, and structure. The company claimed that much of its explosive growth came from third-party partners operating across Asia and the Middle East. These partners allegedly processed massive transaction volumes on Wirecard's behalf in regions where licensing and oversight were difficult to verify. To outside observers, the explanation sounded plausible. Global finance, cross-border regulation, and offshore structures are complicated. And most people, including sophisticated investors, are reluctant to admit when complexity exceeds their understanding. That uncertainty created space for manipulation. Over time, journalists, short sellers, and independent researchers began identifying inconsistencies. Margins appeared unusually high, and some counterparties could not be reliably verified. Certain transactional structures resembled circular flows rather than real economic activity. But skepticism rarely gains traction during periods of rising valuations. And by that point, Wirecard had become something more than a company. It had become a symbol. Questioning it increasingly felt like questioning Germany's ability to compete in the digital future. Even regulatory behavior reflected that tension. Authorities in Germany initially focused significant attention on critics rather than escalating Wirecard investigations. These critics included journalists and investors who publicly questioned Wirecard's accounts. At one point, restrictions were placed on short selling related to Wirecard shares. The implication was subtle but significant. Defending a national success story can be more politically comfortable than investigating it. The unraveling began when investigators stopped relying on documents and began verifying reality directly. Independent auditors traveled to the Philippines in person to confirm the existence of the escrow accounts. What they found was simple and devastating. Local bank officials stated the accounts did not exist. The documentation was fraudulent, and the funds had never been there at all. Once that information became public, the collapse was rapid. Wirecard's valuation fell by more than 99%. Executives resigned, criminal investigations spread across multiple jurisdictions, and CEO Marcus Brown was arrested. And Jan Marsalek disappeared. At first, authorities believed he had fled toward Asia. Immigration records suggested travel into the Philippines, but those records were later determined to be falsified. Subsequent investigations indicated a very different route. Rather than heading east into Southeast Asia, Marsalek allegedly moved through Belarus and into Russia with assistance from individuals linked to intelligence networks. Reports later placed him in Moscow, living under a false identity. As of today, he remains one of Europe's most wanted fugitives. What remains most unsettling about the Wirecard story is not just the scale of the fraud. It is how long it remained invisible inside systems designed specifically to detect exactly this kind of failure. And for years, auditors approved the accounts, regulators defended the company, investors continued to buy, politicians promoted it. Every warning sign was absorbed into a narrative that too many people had too much incentive to question. By the time reality finally asserted itself, there was nothing left to prevent the collapse. And the most important lesson is not about fraud itself. It is about how easily entire systems can become dependent on the stories they are supposed to verify.